Charles Munger on surviving in market recession of 2023. Charlie Munger surely knows how to put spices on his financial analysis. In this video, we'll be discussing the interview which Charles Munger, the billionaire investor and former real estate lawyer, gave to CNBC. In his interview, Charles Munger basically talked about the dangers of market recession in 2023 and how to brave the impending financial disaster. He also talked a bit about cryptocurrencies, how cryptocurrencies have fallen from grace as of late. Charles Munger is nothing short of a legend and does not like to stay in the media spotlight as much. Despite the prevailing negative outlook on the excessive money printing of the Federal Reserve, Charlie Munger does not share the same pessimistic point of view. Central banks, or the Federal Reserve in the case of the United States, play a big role in curtailing any negative effects. Charlie Munger's opinion is interesting because the Federal Reserve has recently spent a whopping $4 trillion in recent years. This overprinting has triggered a fresh wave of severe inflation all over the country in the past year or so. Obviously, inflation has its own negative repercussions for the national economy. Charles Munger, however, does explain why he continues to support the recent overprinting of the Federal Reserve. If the Federal Reserve puts a stop on the excessive spending too quickly, it would bring the economy to a recession. He argues that if the Federal Reserve had not done what they did, then it could have led to a more challenging fiscal situation for the country. We have conveniently forgotten that when the pandemic hit the U.S. economy, about 15% people lost their jobs. The mile-long lines of applicants for a measly minimum wage job and people who had to go to food banks because they had no other way of putting food on the table. In these depressing circumstances, people were quickly burning through their savings. Charles Munger saw this excessive printing as a prerequisite for salvaging our economy, even if it meant that we would be hit by a recession in the next year. Between these bad options, the Federal Reserve chose the least bad one, and wisely so. The next big thing in this volatile economy was the rise of cryptocurrency. This was backed up by speculation from influential economists and financial experts that fiat currency was on the verge of its demise, and that the cryptocurrency is the next best thing. Charles Munger has expressed disappointment over the recent careless remarks of his former colleagues about cryptocurrencies. He maintains that these individuals were reasonable and reputable, but recently have encouraged a trend that people have to be in on every new financial fad. This swelled the new bubble of cryptocurrency and led to a lot of unfounded speculation. This was completely irresponsible, according to Charles Munger. Charlie Munger stresses on the importance of a good reputation in financial life, and once financial experts jump ship to promote frivolous, volatile trends, then it leads to a buildup of public frustration and mistrust over investors. Maintaining a long-term healthy relationship in terms of returns from cryptocurrencies is partly just fraud and partly just a delusion. Financial advisors should be doing their due diligence and giving solid advice on that basis. The reason why Charles Munger has such a strong opinion on cryptocurrency is that seasoned market investors will not invest in some coin which makes a 12-year-old a billionaire. It's fascinating how Charles Munger does not criticize people who brought cryptocurrencies at a smaller scale, but people who were big investors and who heavily invested in such currencies. When the stock value of cryptocurrencies nosedived in the past several months, the market share values of these big investing companies also collapsed. This should have been the case, since most investors and general people who are in the know that cryptocurrencies have no intrinsic value of their own. These currencies may have an assumed value, which is given when there is no intrinsic value. The success of currencies with imputed value or assumed value depends on mechanisms which resemble that of a Ponzi scheme. For those viewers who are not aware of what a Ponzi scheme is, a Ponzi scheme is essentially a fraudulent scam which promises quick payment returns to their first investors from money received from the newer investments. In this way, the money keeps getting recycled and the business thrives on aggressive expansion. At any point of this investment funneling, the people responsible for the scheme disappear. For the large investment corporations, the cryptocurrency misfire can be dismissed as a standalone error and can be pretty easy to let this go. But we feel that Charles Munger is on to something. Why do all the reputable investors feel the need to be immediately cued into every investment fad that comes up. These investors want to make the most while the proverbial sun is shining, and although we can appreciate the sentiment, it can be very dangerous. It can be dangerous because enticing opportunities like the cryptocurrencies lure you into areas over which the investors themselves know little. I think Charlie Munger's anger is justified because these large value investors were suckered into making investments they had little information about. Interestingly, the crazy investment pattern can be partly justified because the technology behind the cryptocurrency seems solid. For example, the blockchain. Charles Munger does not deny the idea behind the blockchain was a good one, but he seems to think that pushing good ideas to an extreme can lead to a more devastating impact than starting off with a bad idea from the start. The good idea of using blockchains is very similar to the idea of using mortgage-backed securities. At the time, using mortgage-backed securities seemed like a brilliant solution to securing mortgage loans. But when this brilliant solution was pushed to excess, it led to the bursting of the real estate bubble back in 2008. The skepticism which Charles Munger has expressed towards cryptocurrency can be pushed aside by labeling him as a technophobe or someone who doesn't get technology. Someone may even say that he is comfortable investing in stuff of yesteryears. Charles Munger is not against venture capitalism. He supports new companies, but what he doesn't support is the over-reliance on speculative hype. He is in favor of having a system of public refute for these mega investors. This system of public refute would be hostile to people who irresponsibly promote huge financial risks. This system of public refute is actually a genius idea since we have liquid securities markets, which leads to excess and manias over these new financial fads which no one seems to know how they work. Some form of craziness of this sort is baked into the system, and the people can stay aware of these issues by using the public refute system. Charles Munger is rightly cynical of these magical technologies and is of the view that not every legal financial maneuver in the book should be exercised to make money. If one has an inkling of an unsound financial investment, one should stay away from it. That is the Charlie Munger way of doing things, and his way of investment usually works the best. So this is how we survive the impending market recession of 2023, by making smart and informed investments. Investments are a rational activity and have to be made with regards to your long-term goals. Being rich is a matter of how you keep your cool rather than how intelligent you think you are. Your investments must be informed by facts, not speculation. This means that getting rich is not difficult at all. Thank you all for watching this video. I hope you found something of value by watching it. If you liked the video, please consider leaving a like. Subscribing to the channel is a great way of supporting us, and it tells us that you'll want to watch similar videos. Take care and stay financially smart, and we'll see you guys in the next one.